Joins in now to talk about that. Shrikant, hi, good morning. After 3 quarters of a contraction in your top line, finally this quarter
Good
you've
morning.
seen a growth of about 3 odd percent. What kind of growth do you expect in the second half of the year?
Well, I think it's been a good quarter for us. We remain focused on sweating our assets across the manufacturing and distribution businesses of the group. We remain focused on strengthening our intellectual property platforms in the form of brands. We currently operate approximately 12 to 14 brands, and we sort of focused on achieving 1,200 crores from branded throughput over the next couple of years. So we're really busy building these platforms, sweating assets, focused on improving our return ratios and things like that. So as far as this year is concerned, I think the momentum of the first half is likely to continue into H2.
Okay. What kind of revenue growth are you looking at for the year as a whole, Shrikant?
I can't specifically comment on the revenue growth for the year as a whole, but as I said, the kind of numbers we are seeing in the first half, that same momentum is likely to continue into the second half, both from a standpoint of operating revenues and profitability.
Okay. Shrikant, just stay on. These are some visuals that you're getting of the Mindtree management addressing the media. Good numbers, but we'll go across to that in a bit. Before that, Shrikant, can you just give us some more details of the revenue growth in terms of geographies? Which geographies doing better between North America, Europe and Asia? And going forward as well, what could the growth look like?
North America is our largest market, so we have a large position in that geography across the United States, Canada and Mexico. So clearly for Himatsingka, that's a very important revenue stream, and therefore that will continue to be our largest market. We see some softness in demand in the European geographies and the Indian Asian areas where we are present. So I think North America is the geography that will sort of lead the growth for us.
Okay. Well, we perennially hear about global demand shrinking. Yeah. Okay. Shrikant, that was my question. If you can give us more color on whether you expect the global growth or the lack of it to hit your revenues in the second half or later. And how much is your brands business? Is that kind of insulated from global contraction simply because it's a sought after brand?
That's right. Lata, the global demand in our industry is sort of stable, and at this point it's a very company specific game that's being played out as far as home textiles is concerned. And in that space, what we are doing is we are, as I said earlier, we are focused on enhancing our intellectual property capabilities by increasing our brand portfolios. So, for example, we've just signed on the Aeropostale brand. Earlier this year, we signed on the license for the Kate Spade brand. We operate other marquee brands like Calvin Klein and Barbara Barry, Esprit, amongst others. So our brand portfolio for FY16 should be in the region of 800 crores. Okay. We are looking to grow it to approximately 1,200 crores over the next 2 years. And this will help us get a good quality of shelf space in the markets that we operate in.
Oh, these are great brands that you've tied up with, the likes of Kate Spade, etc.
The group is...
Yeah, please go ahead.
That's right. So on the one hand, we are focused on enhancing our branded revenue streams. On the other, earlier this year, we announced our Capex, where we will be investing in increasing our manufacturing capacities. So we will be seeing that pan out over the next 3 years as well. So that will take care of our manufacturing growth while we also focused on enhancing our retail and distribution growth.
Okay. You have a plan to double your capacity in Hassan. What does the new capacity look like? When does it come on board, and what will it take your total capacity to?
Well, the current capacities at our sheeting plant stand at 23 million meters per annum. In phase one, we will enhance our sheeting capacities. We will double these capacities from here, and we are likely to look at commissioning our sheeting capacities in the first quarter, in the latter part of the first quarter of next fiscal. So that will be the first project to go on stream amongst the various projects that we've announced.
Okay. If you can give us the full timetable, I guess you get to 46 million by June 2016. And what is the remaining timetable of Capex on stream?
Well, the Capex will be phased over a period of 3 years. So we will be investing in sheeting capacities. We are also making a foray into the terry towel space because it's extremely synergistic with what we do today, and it's an integral part of the cotton value chain. So that's something that will be commencing over the next 14 to 18 months. We will make a start on that front, and we will also backward integrate over the next 14 to 18 months as well. So I will be happy to share more details as far as the timetable is concerned going forward, but as of now the sheeting capacity is what looks to be first off the block with a commissioning for June 16.
Will this mean a fairly big improvement in your margins because you will gain operation leverage in FY17? So do FY17 margins look much better?
I mean, logically, manufacturing is relatively more margin rich than the retail and distribution businesses of the group. We have a strong portfolio of products that we manufacture. We have a strong IP platform that we leverage. So clearly, ramping up manufacturing capacities will augur well for our operating margin profile. That's true. Both increasing our sheeting capacities, backward integration, foraying into terry towels, all these three initiatives will be margin positive for the group. The current manufacturing portfolio of the group is approximately 1,000 crores. We've done 509 crores for the first half of this year versus approximately 480 crores during the last year. And we are operating at approximately 90% capacity utilization levels at our current sheeting plant. So we look forward to increasing this capacity and getting on with placing the fresh capacities.
So what, top line doubles in FY17?
I cannot comment specifically as to how I see the top line panning out. But it's safe to assume that we will see strong organic growth coming in from these additions on the capacity front vis-a-vis FY16.
Okay, I just have one question, to come back to that point you were making about increasing your return ratios. What is your return on capital employed currently? And given that, you have a factory expansion that is underway, do you think there could be some pressure on your ROCE in the near term?
No, I don't think there'll be any pressure on our ROCE in the near term. As far as our ROCE for FY15 is concerned, it was approximately 11% and we will see improvement given the higher profitability across EBITDA, EBIT and PAT levels on a consolidated basis. So FY16 should see a good increase on the ROCE front and on the ROE front. And going into FY17, since these capacities will be commissioned in a phased manner, I think the placement of capacities and the commissioning of capacities will be well coordinated, and therefore the ROCs should continue to see improvement.
All right, Shrikant, thank you very much for joining us with your thoughts and the detailed plans of the company and how expansions will come on stream. The stock has seen a 5% cut at this point in time, but that I would assume is routine. There was so much of buying in the stock that a bit of selling on the news or profit taking is to be expected.